All right, good morning. How are you? Welcome to this thing we call Forex.Today. More than 18,000 Forex traders, part of this community. Thank you for being a member, a subscriber, or a client. Fortunately, I spilled coffee all over my desk. All right, so let's get going. It is approximately 9 a.m. in New York City, just a half an hour before the stock market opens and volume and volatility returns. Thank you for being a subscriber. Let's get on with it. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I am a currency trader with super dirty glasses. For some reason, I can never get them clean. Anyways, as long as I can see the charts, that's all I need. Think about this. A small business in which you need maybe a laptop. That's it. How cool is that? Anyways, I've been doing this a long time. This thing called Forex, I've been doing a long time. Learned some things technically, fundamentally, psychologically, some tricks of the trade, some market hacks. So if you ask questions, I'll do my best to share. The overriding goal of this webinar today is to teach you how to plan trades in advance. So if you took my advice yesterday, you've already planned out what you're going to do today, and today you're going to plan out what you're going to do tomorrow. Of course, that's within the framework of your weekly and your monthly trade plans. So anyways, ask questions, get involved, take notes, and if you could, on the recording, would you please document what you learned? Document the key takeaways in the comment section below today's recording. That way you can go into the back office of your YouTube account, search the comments that you've left, and you can bring up very specific videos, maybe even time-stamped like Daniel does, and say, oh, in this moment, he says the thing that I want to remember. That's cool. So anyways, manifest your destiny. I'd like to thank Traders Way for being part of our community. You're a trader, you're going to need a broker. It's necessary. You need someone with liquidity partners that can find somebody to put on the other side of your trade for you and execute it quickly. Traders Way has earned my loyalty and respect. If you visit tradersway.com and download a demo account and place some trades and practice and trade for days, weeks, months, and years, well, when you develop the skills and the confidence you need to trade real money, you'll already have that execution partner that you trust. Tradersway.com. Okay. A few people, North Carolina, Florida, very cool. Daniel says, hey, commenting on Brainerd's speech from when was that? Friday, Daniel? Determination of when to begin to slow asset purchases, so when to taper, will depend importantly on the accumulation of evidence that substantial further progress of employment has been achieved. All right, well, we want to draw down the unemployment and put more people into the workforce and continue to draw down unemployment. That's what all that means. Ananda says, is it a good idea to have both a scalping account and a swing account? Absolutely it is. I've recommended that for many, many years. Yes, absolutely, totally, for sure. Puerto Rico, ho! What's up, Latino Crypto? All right, so, all right, I'm just messing around. Okay, just messing around with Aussie from earlier. It's funny I'm on this. I wanted to, if I was going to show this to you, I'd show it differently. I'd do it this way. All right, this is to me what's important. Okay, bulls are thinking about a move like that. Bears are thinking about a move like that. So it really depends on what you want to do. Oh, I forgot about my poll. Let's see. Just wanted to see how much you wanted to cover other things. Cool. Boca, well, that's very interesting. Your faith in Forex. Why? You think Forex is lost all its liquidity? Well, in the last, 3 years, we went from $5 trillion to $6.5 trillion a day. Boca, come on now. Change the language. It'll be important for your psychology. It wouldn't be faith in Forex. It'd be your faith in your ability to trade Forex. And I'd rather you focus on that. I think those that say, oh, you can't trade Forex, or my broker trades against me, or this, that, and the other thing, they're depriving themselves of their destiny. Boca is funny. All right, then quit. What can I do? How am I supposed to argue that? That's really funny. That's really funny. All right, cool. So anyways, let's focus on this. Which one are you? Are you currently still a bear? Or are you currently still a bull? Okay. This is what we're looking at here. Now, one of the things we looked at yesterday was commitment of traders report. Boca, just actually stop for a second and think what you're saying out loud. It's so ridiculous that I don't even know how to respond. I mean, it's a $6.5 trillion market. Banks and hedge funds and traders have been trading currencies since really the beginning of foreign exchange. Like, it's just since money was used and needed to be exchanged for other types of money. It's really, really fascinating. It's like you losing money in the stock market and you're like, well, I need to know that people make money in the stock. Look, everybody makes money in the stock market. It's just, I don't know how to respond to it. So be careful is all I'm saying. Okay? But I'm going to leave it at that, Boca. I think it's dangerous if you're losing money and you're throwing that or mirroring that for the entire industry. Everybody is like you losing money. It's a very dangerous psychology that you got going on because you're not taking responsibility. Like, dude, what's the problem here? Look, there's a sell, there's the exit, there's the exit. What's the challenge? You're not doing it. So I'd rather you focus on what you and not, right? Good. But like, just your psychology is very, very dangerous. Very, very dangerous psychology, your thought process. So maybe it's cultural, maybe it's experience, maybe you've had a bad run or something, but wow, I don't know how to respond to that. Okay. William says the only smart 10% make money on this. You know what? Actually, I even disagree with that. Like, anybody can make a little bit of money at this at any time. Okay. Okay. But anyways, whatever. So let's go back to this. What I'm trying to say is, do you have a fundamental bias? And are you looking for a change of current market conditions from bearish to bullish? Then that's what you're trying to set up here. And basic rules of engagement say, okay, you know there's an issue here. I guess let me draw it in this color. You know there's an issue there. You know it. Dude, look, okay? And you want to buy somewhere between the resistance and the support if you're a bull. You also know that what you're doing is very aggressive, meaning you are throwing down a bet that it's going to reverse even though it has not yet reversed. Okay? Okay. Roderick says, I wouldn't call people dumb, just not motivated to trade. Well, I didn't say he was dumb. I said the attitude is dangerous. Okay. Okay, that's all. Okay. All right. Okay, I'm just saying take personal responsibility to improve. All right, cool. So if you're in this camp, you know, there's little time frames, there's medium time frames, there's bigger time frames, but at some level or at all levels, you're expecting this. But understand that that hasn't happened. Okay? That hasn't happened yet. So then you need to use your analysis and say, is this market bullish or bearish? Well, technically, it's bearish if you measure it this way. Okay, and it's bearishly neutral if you're looking at the breach of the 55 EMA here. Oops, that was supposed to be a circle. Okay, this breach and this breach here shows mediocrity. Okay, that shows mediocrity on this time frame. That it's really built sideways. It's not really bullish, not really bearish. It could hang around until the 200 catches up, or it could go up to the 200, come down and go nowhere. It shows the mediocrity in the trade, which means both bears and bulls are going to try to buy this. Now, being Aussie dollar, I showed you yesterday the Commitment of Traders report, and it showed that there's reasonable, if not more than reasonable, evidence of US dollar strength. Okay? So that might favor the current move this way. Not necessarily, but it's what you're believing. What are you trading? Can you point to a reason of why you're doing what you're doing? Most people can't, and that would be the problem. Okay? So you could say you're buying dollars because of what you see in the COT report. Okay? What else? No, not that one. Is it this one, I guess? Okay. What if I taught you with this? Does this indicate dollar strength or weakness? Look at it. I taught you very specifically. Yeah. So, right? So are you setting it up or not? Okay. No. Let's go back to this. Or did I already kill it? 10-year. No. Did I kill it? I killed it. Yeah, makes sense. No, here it is. Okay. This is foreigners buying. Let me do another one. All right. You can invest money in Germany for 10 years and lose 0.5%. Or you can invest money into the United States for 10 years and earn 1.1, 1.2. Well, you know what? Like 5 days ago, it was 1.25. 5 months ago, it was 1.7. So who's buying? Europeans might be buying U.S. Treasuries. The Chinese might be buying U.S. Treasuries. So I look at this and you're supposed to be buying dollar. Okay. Okay. Now going into here, okay, we were bearish U.S. dollar here and neutral here. Neutral meaning you could both buy and sell U.S. dollar as you see fit, but no fundamental trend in play. Well, now you can see the fundamental trend is definitely pro-U.S. dollar. Okay? So you're supposed to be buying dollar. Okay? I've also trained you that very often you see Japanese yen strength this time of year. Okay. Okay. So here we are in June. This is when I'm like, the market will pivot around the June Fed meeting. What do you think of that, guys? In here, I said you're going to watch at some point soon, by the time we get to the June Fed meeting, right? You're going to likely see a rotation of yen being weaker than the US dollar, than the yen not being so weak. Okay? Did anybody write that down in the notes? That there'd be a rotation from yen weakness to more, I mean, I don't know. It's hard to say because everything's relative, but we were selling yen here and selling dollar here. And then here is just simply a change where this isn't necessarily true. That doesn't mean down. So 5 years from now, you won't say, well, I have to be buying yen here and selling yen here. No. We don't know that to be true. It'll be different in every market condition. But what will be the same is this is a pivotal point in your year. Okay? So you have to be open-minded. And this is where I'm like, look, this is all shooting at rabbits. There's no fundamental trend here. There's only seasonality. Right? You guys got that? And so in the next 8 weeks or 8 to 12 weeks, we will try to see if the fundamentals behind this move still exist. Okay? Okay? So, according to this chart, this market is bearish. What's the problem? You're using technical analysis, right? Okay, you have a 21 EMA. You have a monthly central pivot point. Okay, and you have a roll. Well, I'll just resistance, we'll call it. It's not a roll reversal, but resistance. Okay, with seasonality. Okay. Okay, are you missing that in your analysis? If so, why? Okay, you see? I know if you do the work, you're capable of this type of analysis. Okay, I know you're capable. Question is, do you do it? I think that's the bigger issue. I don't know. I don't know how to answer that. Some of you do, some of you don't. Oh, I just scratched. Let me show you what I scratched. It's kind of funny. Let's see if this will work. Nope. You like my new shirt? Whoa. Oh, nice. Oxford. Yeah, it's all embroidered though, so it's itchy. Yeah. Oh, and I just dropped my new camera. Not the camera I'm using, the one I'm testing. All right, hang on. Oh, there we go. Whoa. Whoa. Come on now. It'll never be the same. There we go. Cool. Now I got to get this other thing out of the way. Oh, no. That'll work. Yeah, I'm going to try to get that, Michael. Keep, right? NFP is this week, so how will that affect market in the... Who cares? Who cares about non-farm payrolls? Who cares? You already know what it means, right? So somebody asked about Brainerd. No, not Brainerd. What's her name? Brainerd. What she said on her speech on Friday. Did you guys pay attention to that one? Okay. Okay. That's not it, though. But that's a good one. I like it, right? Parachute pants and central bank money. Anyways, look at Brainerd's speeches. Brainerd. There it is. Okay, you do this work, right? It's like going out to the person that says, I don't know if anybody makes money. I don't know if anybody does the work. I don't know. I don't know what you do. But anyways, there you go. This was, Friday. And so when you read that, you already know what they're thinking. Like, what is the importance of non-farm payroll? Well, put it into the model that you're already creating. You're already paying attention to the Fed. The Fed's already telling you what type of information they're looking for and why and how it'll change. And therefore, you know how non-farm payrolls fits in. Right? The determination of when to begin to slow asset purchases will depend importantly on the accumulation of evidence that substantial further progress on employment has been achieved. So what does that mean? Will NFP be good? Well, is that what she said? Is that what Brainerd said? No, substantial, which means NFP plus NFP plus NFP. So what we're looking at is the trend in non-farm payrolls. And then you could look at the subcategories, things like labor force participation rate going up. And while that's going up, I mean, that would raise the unemployment rate. But while that's going up, the unemployment rate continues to fall despite the labor force participation rate going up. And that would show substantial improvement in the labor market, which, as Brainerd told you on Friday, would lead them to taper. But I have to tell you again, this isn't something I got from CNBC or Bloomberg or Barron's Magazine or the Wall Street Journal. Dude, she told us on Friday. Right? Cool. So, will non-farm payrolls be important? Well, it's important in the sense that it's a data point in the current trend. Now, we'll look at things like, the service sector versus the non-service sector. And we're concerned about the government shutting things down again, or people not going, people don't want to be maids at Marriott anymore. People don't want to be dishwashers at Applebee's anymore, that kind of stuff. But right now, I understand those jobs suck. You might only be qualified to do that sucky job, but for those people, I understand those jobs suck and they don't pay enough and all that kind of stuff. But ultimately, right? I know you don't want to do it. And if you make almost as much money on unemployment than doing it, I understand all of that. And if you're not pressured to pay your rent, okay, that I understand that as well. Those things are likely to change very soon. And I'm more interested in seeing how the market adapts to that type of information. But we're not going to see that till October. Do you understand that? Okay, we're not even going to see that until October Fed meeting when they discuss what they learned in September. And I bet you then, even then, it's not enough data. So my major concern right now is, will they taper this year? That'll change everything. Okay? So, make sure you guys are focused on the right thing. Let's go here. Okay. So that's back to the Aussie. This was the conversation from a week ago. If you were going to be a bull, how would you be a bull? Okay. And if you're going to be a bear, how and when would you be a bear? Okay. And so I would mark this up and say, there's still a lot of bears in this market. I already covered this on a different chart. Okay. But we also know it may be too early for USD weakness, and based on COT, okay, and based on the 10-year T-note, there's still a lot of that. But it's not doing that. Why not? Well, maybe Aussie currently today in the moment is strong. So you have to do your relative strength exercise and say, well, maybe you should be buying USD kitty CAD. Okay, and then you go back. And we don't have it here, or do we? There it is. Okay, and maybe that's the better trade. Okay, so mark it up. Simple technical analysis, y'all. Okay. When do you become a bull? Okay. Okay. Here we go. Here we go. You see that? I doubt this would be a Friday front run from you, okay? But this is a higher high on the open. This is a roll reversal. That is, if that's a legitimate trade. Okay? Then what? Higher high, higher low. This is a legitimate trade. Okay? Okay? This is a legitimate trade. You see it? Now, this is where a bear is going to start to challenge. I don't know if they're there. Right now we have seasonality in favor of this going up. We have the 10-year treasury market, or all treasury markets, favoring the up. Okay? But I still believe there's likely to be bears. So the interesting thing is, what I'm showing you is you see this green candle, you don't buy. What do? You identify the place in the future you'll buy. So we know someone is going to buy this, right? But I don't think over, if you do the analysis, they're not likely to make money. They're likely to make mistakes. Okay? Same thing. If someone buys this giant move, okay? It's skyrocketed for over 3 hours. Okay? Then what? Then they make mistakes. Then they make mistakes. Then they make mistakes. Okay? And so now we're in this new move. Someone's likely to buy it, but more likely we got this. What does it mean? Well, yesterday I asked you to do your analysis, okay, to plan the future. Okay? Plan the future. So this move that just occurred over the last 2.5, 3 hours should have been your trade plan yesterday. Okay? Okay? You understand? You need to be thinking about this now. Well, in 24 hours, will you get an opportunity to buy this? Are you a bull? You'd have to be a bull for that, because just because it worked here and here doesn't mean it's going to work here. Why? Well, now you're at resistance, son. Okay? So be careful. Doesn't mean you can't. Just don't be a fool. Just recognize that you got more challenge. There's more weight on top up here. You see? The atmosphere is thin. I don't think you're going to get as many bulls buying here as you did down here. Okay? Standard role reversal, right? Or for some, this is like an inverse head and shoulders type pattern. Okay? I call them 1, 2, 3 and all that kind of stuff. People call them whatever they want to call them. It doesn't matter that much. Okay? What's the reasoning here? Okay? You're following the 10-year T-note. Or you're following oil. Or you're following gold. Okay? Or you're doing something like this. What do you want to do? Okay? Okay. This 55 tells me there's a pretty reasonable chance we head up to R1 and then bring this back down. Okay. Which tells us about maybe 200 pips up and then maybe 200 pips down. And we start September basically right where we are. Ish. Maybe. Okay. There's a lot of reading into that. Okay. But I want to emphasize, or, are you doing the work? Are you actually going to the Fed once or twice a week looking for information about should you be buying the US dollar, should you be selling the US dollar? Are you actually doing that? Are you actually tracking fixed income and commodities to discern what direction currencies are going to go? Do you actually do that? I don't know. Or do you log in and throw down some trades? I don't know what you do. I don't know. That's for you to decide. Okay? I don't know what you do. And I know if you're frustrated with your results, I would say, well, let's do it my way for a while. Okay. This goes back to, wow. Are these weekly? Weekly. So there's a plan A. Oops. This is a plan A sell. This is a plan B sell. Look like plan B got it. Cool. M3 here, which is your Sunday afternoon, Monday morning trade. And your target, right, is down here. Okay, 151. This is a sell at 153. Your target 151. Oh my God. Oh my God. I already have it planned out, even the exit. Oh God, as Kanye says, right? Speaking about, oh God, I just lost my mic. Hang on, I lost my mic. Oh God. Oh God. Oh, hang on. Lost my mic. Hang on. Oh, God. All right. So, yeah, we're back. Okay. I was looking at something that we did back in my live trading group back in March, I think it was. And we were talking about from the April-May period, the Japanese yen would be stronger than the dollar. Okay. So now, right? So in those time periods, you have to be open-minded. That means, so here's the April-May period. Okay. Yen was actually weak, but then by June, it rolled over. So sometimes, the farmer doesn't know exactly when to plant the seeds or when to harvest, but they know planting in spring is best and harvesting in the fall is best. What specific day, what specific week, much more difficult, right? So anyways, very interesting. Okay. Okay. Look at the crazy volatility on pound yen. That's why we call it the beast. Okay. The thing is, we still have some time where this can be down. Okay. Based on nothing but seasonality. I don't want that to occur. It just is. Okay. Okay. Here's August and then up. So do you think this August could be something like this and then the fall like that? What do you think? This happened earlier. Okay. Every year's got its own thing. Okay. But what if you said, I guess I was going to say using treasuries, but I think that might be a little dangerous right now, trying to say, well, watch U.S. treasuries to trade Japanese yen. That might not be great. Let's just pick a random dollar, Kiwi. Okay, let's do Kiwi. And let's see if I still have the treasury. Yeah. 6 months. So it topped out, look at that, 1.75 on April 1st. Okay. And you can see it's not perfect. Okay. It took a while, at least against Kiwi, but then eventually it started coming down, right? Notice it may not have been the change in the note or the yield, but the Fed meeting right here. There's that big June Fed meeting I spent all that time on. So what's more important, the yield or the anticipation that the yield will go up or down? And in here, in that circle, people found that the Fed isn't going to taper soon. Not like in June. See, people thought the Fed was going to taper in June, so yields went up to 1.75, which is another way of saying the treasury market was bearish. But then we get to June and the Fed says, yeah, we're only thinking about it. Well, that means they're not going to taper soon. So buy the bond market. And guess what? Bond market went up. Kiwi dollar went down. You see that dichotomy? It's not necessarily the yield. It's the anticipated change in the yield. And more particularly, and this is what I've been teaching you guys for, over a decade, almost 2 decades. It's the anticipated change in policy at the Fed that matters. Not even necessarily the headline yield or the yield differentials and all that kind of stuff. It's more like people here thought the Fed was going to taper, then we found out they're not likely to taper, and that was the major difference. That's the difference. Okay? Taper? Not yet. So what do you think is going to happen when we're certain they're going to taper again? Okay? On says then, inflation, all that kind of stuff. Look, no, it all comes down to the central banking policy. Okay? So what do you care whether it's inflation or some other reason that the Fed, let's say, changes their policy? No, it doesn't matter. Inflation? What's the big deal with inflation, right? Are we scared of inflation? Okay. Europe has been trying for 10 plus years to create inflation. Japan has been trying for 20 plus years to create inflation. So do we care about inflation levels in the United States? Only the media scaring people. Oh, well, we have a real negative yield, right? The real yield is negative 1%. But dude, you're making 12% a year in the stock market, so shut up. Oh, well, I don't have money in the stock market. Well, then you're poor and it doesn't matter. Okay? You go to your job, you earn money, you spend it on rent and food, and you're done. There's no money at the end of the month. Okay? Well, there's nothing to be done about that. But most people in the economy save for the future. The savings get turned into investment and multiplied through the money multiplier so that the economy grows at least 2.2% on the long run. But inflation, who cares? Okay? Okay, again, inflation minus yield, you get a negative, right? Or how about this? Oh my God, we have 3% inflation in the United States and 8% GDP. GDP. We have 3% inflation. Who cares, right? What's the difference? You're 5% richer this year than last year. Okay? I'll give you an example of how this works. I know somebody, apparently they're not that smart, but they bought a house not far from me. Not in this neighborhood, but 1 or 2 neighborhoods over. And I'll make up a number here, but they paid $1 million for the house. Then they move in, and you know what they said? Oh my God, we can't put a pool in the backyard. I'm like, you bought a house? And you didn't even consider that? So you know what they did? I swear to you, they moved into the house, and within 100 days, they sold the house. And by 100 days, I mean like 60 days. Something like that. Like they just moved in. So they sold it. 60 days later for 1.1 million. They made 10%. Now, in reality, by the time you cover all your costs and stuff, they broke even. But dude, they bought a house. Again, these are made up numbers. He bought a house for $1 million and like less than 100 days later, sold it for a 10% profit. That's why you want to own assets, by the way. Crazy, right? Crazy. So anyways, central banking policy, y'all. How many people are going to make a commitment to study central banking fundamentals and macroeconomics significantly more in the next 12 months? In 1 year, you're going to seriously make some drastic change. Yeah, we already did the beast, Joseph. Sir, he said, did they pay 10% more? You know, I looked at it where they moved, and I was surprised. I think they're renting. But it's a nice house on the lake. It's small. I think it's 6,000 square feet, but it's nicely done. Yeah. Hey, yeah, what's up, Peter? Yeah. Pete on a rendezvous with crypto. Yeah. Hey, I got my cryptocurrency certificate today, I think it was. Okay. Oh, you want me to see the move again? I just covered it, but okay. Okay. What's up? Okay. The target is 25 pips away. So once again, like, so Joseph, okay, this was covered almost we covered it here. So this is what we do in our swing trading group, guys. We covered it way back here that there would be either sell here, plan A, or up here, which is the plan B. And if plan A worked, remember this was on a Thursday and we're planning for Monday. You understand that? So on a Thursday, we're like, well, plan A and plan B for Monday. And so we don't know what's going to happen on Monday because it's still Thursday. But nonetheless, we said on this day here, way out here on Thursday, if you're able to sell around 152, your target's going to be here at 150. Now, if it went up to 153, okay, you'd be selling around there, targeting 151. Okay, so now, right, so we're going back to Joseph, and he's like, look at this big move. And I'm like, well, that's, the move to me is this. And so that's just one candle. Okay, now, if you're going to do price action type trading, the next thing is this. Okay, double top, lower low, lower high. Look at the sell zone, guys. That's Monday's trade. Okay, then here's Tuesday's trade. Look how simple that is. You know, and it's another role reversal. Basic price action, kick it off the 4 hour 21 role reversal daily sell zone. And now here's what you're supposed to be doing. Okay, No, I'm not picking on your trade, Joseph. I'm putting it into context for people. If you think this will continue, and by the way, that's your value add. If you don't know, then you're not adding value. But this is what you might be planning. Now, I planned 2 weeks ago to say, if you got down to 151 or lower, you got to be careful because this move down may come to an end. Okay? But to the person that says, I wonder if anyone's making any money in Forex, I'm like, well, dude, if you're a bear on this, that's a clear setup. Oh my God, that's a clear setup. Oh my God, that's a clear setup. And now you're setting up tomorrow's trade. And that's why I'm worried, like Joseph, where you're pointing this out and you're like, oh, look, it moved. Well, a scalper is maybe scalping all that, making a little bit of money. But I'm like, dude, well, you should have been on that way up here at the London Open. And what we're doing now is saying, well, should I take it tomorrow? Right? And that's right. So you should have been on it either, Friday or Monday, okay, or Tuesday. And now you're planning out, are we already on Wednesday or Tuesday? No, it's only Tuesday. So then Wednesday here, right? Like, that's why I always tell you guys, trading Forex should be boring because this looks exciting only if you're on it now. And you're like, oh my God, look at that. Holy crap, look at it, it's going. Blah, blah, blah. You're like, well, dude, this is what we planned yesterday. So what's the big deal, right, Joseph? Right? Right? Like I'm saying that's what you're saying too. You're like, well, yeah, we planned that yesterday. So if you're short now, you're not even really paying attention because you're setting up tomorrow's trade. And if you take that, well, you assume it's going down. Okay? Oh, so Boca, because I don't have a trade on this, it's not valid and nobody's making money. Once again, be careful. Be careful, dude. Be careful. Your psychology is talking you out. Okay? If you don't want to do it, quit. Okay? You're finding reasons to invalidate. You're looking to quit. Well, if you're going to quit, quit. Stop wasting time. Learn how to flip real estate. Take an options trading course. Buy some Dogecoin. Okay? But if you're going to be a Forex trader, then look for supportive evidence. Find out things that you can do to improve. Yeah. Now, don't worry about it. Just go. Either do it or don't do it. Okay? Do it or don't do it. This is straight out of the training course and exactly what I preach. And I drew it out for people. The analysis is still there. What is lacking from most people is they commit to be the bull or the bear. Okay? And I told people just flip a coin. If you can't make a logical decision on using technical analysis or fundamental analysis, just flip a coin. But you wake up in the morning, you're a bull or a bear. Okay? Look, once you get a lower high, game on. Look at the pivots, Boca. They're only set for selling. Look at them. Right? Look at it. This chart is only set for bears. And the chart says sell here on Friday. Then it says sell here on Monday, but you knew that on Friday. Then on Monday, it said sell here on Tuesday. So now here we are on Tuesday, and it says sell up here on Wednesday. All you have to do is do it. Oh, well, Boca, Wayne didn't do it, so this is bullshit. Nobody's making money. No, you're not making money. So change the attitude. Don't look for reasons that it's all fake. Say, why the hell did I miss that? Well, you may, for I don't know why, maybe you don't trade pound yen, then that's fair game. Right? If you're not trading pound yen, that's fine, then don't worry about it. But if you trade pound yen and you're a bear, you have to do this. If you do this, you will make money. And by the way, when it starts doing this, stop selling. Well, I think, Marina, I think a lot of people may have that in the back of the mind too. Right? Oh, and also people forget this is the worst time of year to be trading, right? But I'm taking this, Marina, and saying it is a psychological aspect of trading. What do you do when you lose hope? Well, focus on your strengths and address your weaknesses. Hit them straight on. Hit it hard. Right? Yeah, I guess. Right? But anyways, sometimes we face these problems, but focus on the solution and not the problem. 99% of the time, you're the problem. Not you, Marina, but us. We're the problem. If I have a problem in trading, it's not the macroeconomics, it's not the central bank, it's not my broker, I'm the frickin' problem. And I need to take ownership of that. And when it's something else going on, like, I don't think anybody, it's so ridiculous. I don't even know where that comes from, but it doesn't make it invalid. Like, I'm not saying what Boca feels is invalid. I just think it's a loser attitude, pardon my French. And so I would focus on changing that and say, look, if you're a bear, sell it tomorrow at this price. What's the complication? There you go. Wayne, I took 4 positions up 700 pips. Cool. Right? There are people here, like Peter. Peter just popped in, right? I've known Peter for what? I don't know, 5-10 years. I have no idea. It might be 2 years. I think it's 10. I don't know. But I know Peter's a great trader. I know he trades. I've seen his returns. I've seen his strategies. I've seen some of his trades. I know what he's done. He's qualified. He's driven. He's professional. And he's got more pieces of paper on his wall than I got on my wall. Okay? He's doing fine, Boca. Right? There's one. Okay? So anyways, but also this is summer, guys. This is the first week of August. This is a very mediocre time of year. I would look at this and say, what a blessing. Okay? But if you're not doing the analysis and you're missing this, this is why you're not making money. Okay? There's a million reasons why you might not be making money. Okay? But the best, look, let's say you're a bull. Explain me this. Where's your bullish entry? There's nothing on this chart that says up. Right? Right? So you can't be buying it, so you can't be losing money. Cool. All right, let's move on to commodities and all that. Let's get some WTI, some Bitcoin in there. Okay? I'll tell you, do you guys remember I was in northern Wisconsin and we were here and I had like a half a Bitcoin in cash. Literally in my cash, in my Coinbase account. And I'm like, oh man, I'm on vacation and I'm exposed to this. But anyways, so no joke, I got out here. Okay. So I had about like 10K. And over the weekend, I made $3,000 because it's not leveraged or anything. It's just boom. Isn't that nice? It's great. Paid for my upcoming New York trip. I showed my son, though. It was great. I'm like, look, son, look, I made $3,000 this weekend doing nothing. He's like, $3,000, right? Because he wants to save for a golf cart and all this other stuff. I'm like, look at that. Look how easy it is, right? And then I closed the trade and it collapsed. It went like this when I got out. Boom. And I'm like, holy crap. Holy crap. Oh my God. Oh my God. Like literally, I got out on this one, which is really funny. It was 12 minutes later and it had dropped like $2,000 or something. It was pretty amazing. Anyway, so here we are monkeying around. Okay, let's talk technical analysis. Are you a bull or a bear? You're like, well, it really depends on my RSI. No, that's technical analysis. Do you believe Bitcoin is going to be worth $100,000 someday? $50,000 someday? $40,000 someday? Do you think it will go up? It's a yes or no question. It's binary. Okay. And if you don't know, then don't trade it. Okay. You're a lurker. You're fodder. You're the sucker. So if you are a bull, you are going to buy a dip. That's how you make money. Chad, actually, you know what it was that made this move here? It had to do with job posting by Amazon was the rumor. I don't really care. All I knew was support. Okay. And that's that. So it's one of these things like it's unbelievably lucky. Oh, I know, but that's why I exited. Because I'm like, a rumor? You're kidding me. It went from 30,000 to 40,000. $10,000. I made 33% on a Bitcoin trade over the weekend while I was on vacation. I made 33% on a rumor. So I'm like, you know what? Give me my money. F you, get out. And that's where I got out, which is really interesting. All right, so now let's move on to the future. Are you going to buy a dip? I don't know, Wayne. Then don't trade. Okay? If you can't make that decision, you are not a market participant. You're just a liquidity event for those that actually have plans and have done analysis. Okay. So now we can further filter this. Are you a bull or a bear? And you're like, Wayne, I'm a bull. All right, it made a lower low. Do you buy lower lows? No. Well, good. Congratulations, you're doing nothing. Okay? If you can't see it, let me draw it for you. So now you have to wait for price action to head up. Let's take a look at something different. Let's say you're only a bull and you're a day trader. You're only a bull, just a bull. You cannot sell this because you're bullish. Okay? Let's see. Let me mark this up. What do you think? Is any of that bullish? Nope. Now we've actually dropped lower. Is that bullish? No. So what's the problem? Do you have control over your trading? Are you trading a strategy? Or are you just throwing down a bunch of trades? Which one are you? Do you remember how I outlined it yesterday? If you're not a commercial or a hedger, then there's only two other traders in this market. Smart money, meaning there's thought analysis and strategy behind what they do, and dumb money, I don't care what time frame you're on. I don't care if you're a scalper. I'm not poo-pooing on a scalper. I don't care if you're a spot trader, a day trader, a swing trader, position trader. I don't care. You either have thoughtful analysis or you throw down dumb trades. That's it. It's quite binary. So I look at this and I'm like, I'm a bull. Good. Should I buy low? No. Okay. I don't buy low in a falling market. I buy low in a rising market. So this is why I use tools. This is a pretty easy, obvious drop. Okay. That's bearish. I want to be a bull in Bitcoin, right? Let's update this. Day trading bullish. Cool. Okay. So another way you could analyze this. Let's try to find all the different ways we can skin this rabbit. Okay. What do you think? Bullish? No. Okay. What do I think here? Bullish? No. Okay. It might take me 2 days to get bullish on this, depending on what happens. Okay. I think it would have to be something like that. You see? What do you think? Does that make sense, y'all? Are you doing the work? Are you doing the work? The second thing is during the fall, while volume and volatility is low, you should join FX Bootcamp, pay the money. Yes, it costs money. Okay? About the cost of a textbook. Okay? For the cost of this textbook, which is a tiny fraction of a cost of a class at Harvard, you can find out what you're missing and fix yourself and become a better trader. Or you can wander in hopeless night. What are you going to do? Okay? If you are not sharp as a tack between the third week of August and the third week of October, you're going to throw away another good year. I don't think this year is going to be easy, and I don't think this year is going to be the way you think it's going to be. And therefore, I think those that are weak and sick are going to get slaughtered. Okay? It's the way of nature. The video training courses is a once-off, Jeffrey. It's a once-off. It's not very expensive either. Okay? Cool. By the way, for those in my live group, we're going to have to do... Which one am I doing today? Open economy. No, this one. I'm doing lecture 13 today. Okay. I'm doing lecture 13 today at 2 p.m., so I'll see you in 4 hours. Maybe we'll talk about this thing called the Phillips curve and a whole bunch of other things. Peter popped in. I'll show that there's an event today with Gary. You know, Gary Gensler is my professor at MIT that taught me cryptocurrencies. As I mentioned before, he used to run the CFTC that oversees the NFA, and the NFA oversees the Forex market. But then he joined MIT, taught me how to trade cryptocurrencies, and like literally on my graduation day, he got hired by now he runs the Securities and Exchange Commission. And apparently, he's now petitioning Congress to get more powers to regulate cryptocurrencies. And he taught me crypto. That's the dude. So anyways, Peter's like, hey, if you want to do this event, well, there you go. That might be very interesting. So thank you for sharing that, Peter. Oh, wait. How did the Fed double their billions in 2 short years after being relatively flat? They bought treasuries and they bought mortgage-backed securities, Michael. Okay? So Michael emailed me this and I said I would address it. So you got a balance sheet. Okay? And okay? And so we're like, how did the balance sheet go up? Well, specifically, right? I want to do this in pink. Quantitative easing. Okay, so the Fed bought things like $80 billion per month in treasuries. And they still do. That's why I showed you the 10-year T-note today. And $20 billion in mortgage-backed securities. Okay? What that does is provides liquidity for mortgages and liquidity in the bond market, which is another way of saying like credit. There's cash and credit available. Okay? And what that does is allow banks and businesses and consumers to be able to borrow money for cheap. It also indirectly pushes down interest rates at banks. So now you have to say, well, I'm earning 1% or less than 1% by saving money in the bank. So you say, well, maybe I shouldn't save my money in the bank. Maybe I should invest that money in the stock market. Okay? And that pushes up asset prices. Or you want to buy a new house, interest rates are low, you have good credit because you're rich, you have a job and all that kind of stuff, right? So you say, I don't want to pay rent anymore. I have a decent job despite COVID. I have good credit because I have savings and right, as well as income and credit worthiness. So now you can get a loan for cheap and you buy yourself a house. Okay? And the Fed backs it up through mortgage-backed securities, okay? Bought by GSEs or from GSEs. Okay? So buying treasuries lowered the interest rate and kind of indirectly forces you through behavioral finance to buy the stock market or buy real estate. And therefore, you join the ranks of the rich getting richer. Okay? And it does very little for poor people. But maybe, right? Maybe in the medium term, because there's demand for real estate and demand for loans and businesses are growing, then the businesses hire and now you have jobs. Now poor people can get a job. And rich people go to Applebee's, and I don't know if rich people go to Applebee's, but whatever. And eventually it leads to jobs. And then once everybody gets jobs, then maybe inflation. Michael, there was multiple versions of QE. Okay. But when the Fed announces QE, what they're doing is pushing up asset prices. And who owns asset? Who owns assets? Well, if it's not you, then you need to start buying assets. Okay? Okay. My house has doubled in value since I bought it in 2010, something like that. My house has doubled. Yeah, Daniel says they're rich, and that's why you want to be rich. Now, you're like, well, great, but Wayne, I don't know how to get rich. Well, I just explained it to you. You buy assets. My son made an interesting observation because, he's got friends at school and he goes and hangs out at their house. And he said something like, I swear to you, just like 2 days ago, he's like, it's really interesting that those that seem to not have as much money have more stuff. He's like, sometimes it looks like our house is a museum. Our house is empty. And he's like, you can go to other people's house and it's just full of stuff. Okay. Well, it's because I can't afford stuff. Do you understand that? I can't afford stuff. Stuff loses money. I can't afford to throw away money. But what we do buy goes up in value. That's where we invest our money. We don't buy stuff, we invest into stuff. And so when the economy tanks and unemployment skyrockets and people lose their job, the Fed steps in to protect my assets. They protect me. And they'll protect you. They don't like me because of the color of my skin. They don't like me because of the color of my eye. They don't like me because of my religion. They don't like me because I'm beautiful and smart and modest. Okay? Monetary policy can support and increase asset prices. That's what it does. So take your money, which is worthless and going to be worth less. Literally, money is worthless. Every day, it's worth less. Okay? Convert it into an asset. And when times are good, prices will go up. And when times are bad, prices will fall, but the Fed will step in and push them back up. So you got to get in on that. Okay? Stop spending money, start investing money. Okay? As a currency trader, find a way to never withdraw money from your Forex account. Okay? Michael says, so if the Fed is holding cash, when did I say cash, Michael? I never said cash. The Fed has no cash. Okay? There's zero reserves at the Fed right now. And they own mortgages and they own treasuries. There's no cash, Michael. I never said cash. They got rid of cash. Okay? So poor people have nothing. Okay, the poor have no assets. and no cash. Okay? The rich have some cash and some stuff. They have boats and cabins and, all that kind of stuff. Big screen TVs. They go on giant vacations. And the wealthy only have assets. I'll do it in a different color. Wealthy only have assets. Now, the interesting thing is assets often provide you with cash flow that give you the stuff that rich people have, but rich people have to work. Okay? Well, Michael, they're only buying $20 billion worth of mortgage-backed securities. Now, also, Michael, I didn't say real estate. You got to be careful. I never said real estate. They own mortgage-backed securities, MBS. They own little pieces of paper that go in the vault. Okay? They also own little pieces of paper issued by the government that they bought from bond dealers. So they have no cash. They gave the cash to the bond dealers. They gave the cash to GSEs, government-sponsored entities that underwrite mortgages. So the Fed has all these pieces of paper in the vault. Okay. Yeah. Right. Well, but the thing is, they don't get money from the value of real estate going up. Okay. They own the debt. Okay. The equity is by the house owner. So you buy a house for $1 million. You throw $200,000 down in cash, and you get a mortgage from a bank who then very quickly sells your mortgage to a government-sponsored entity, Freddie Mac, Fannie Mae, that kind of stuff. Okay? And then the GSE packages that up and sells it to the Fed. And now the paper that says you're paying a mortgage every day is sitting at the Fed. But when the house goes from 1 million to 1.5 million, 8 years from now, you sell the house, you pay back the mortgage at the Fed disappears, and you have $500,000 in your pocket. All right, I got to go, guys. That was a really good webinar. Thank you for being here. Thank you for all you do. Thank you for the good questions. Okay? But remember, you got to fight for this thing called Forex. If you're looking for reasons that you can't do it, then you can't do it. You got to stand up and fight every day. 20 years from now, it's going to be a real challenge. There's going to be dark times. There's going to be bright times. There's going to be dark times. Okay? But remember, most of the time, if you're doing Forex the way I teach you, it will be boring. Boring. You're waiting around for something to happen. You're waiting for tomorrow. Hey, pound yen's falling. I know that was a trade we set up yesterday and on Sunday and last week. Yeah, of course it's falling. Why? Not exciting, right? But meanwhile, you're setting up tomorrow, next week, what's going to happen after, whatever. So you need to be able to stand up and fight. Okay? This is, right? This is a game for the powerful. Those with patience, those with discipline, those with fortitude. So you got to work that out for yourself. Look, here's gold. Gold is either going to go up, down, or sideways. So the question is, does anybody actually make money trading gold? It's so funny. Like, what do you mean? We've been trading gold since, 2,000 years before the Egyptians. Like, yeah. People that make good decisions through hardcore, fundamental, and technical analysis, knows the market well, who's, things like supply and demand, things like seasonality. They use technical analysis to confirm market conditions are favorable to carry out their fundamental strategies and their biases. Yeah, they make a boatload of money, bro. But the sick and the weak die. We cull the herd. That's what we do. So pick a team. You're a bull. Okay? Pick a team. You're a bull, you're a bear, or you're a pig. And pigs get slaughtered. See you tomorrow.